Minister, thank you so much for joining us. It's a challenging macro environment, so much uncertainty when it comes to Trump's trade policies, for instance. The IMF has said that growth for the year is pretty tepid for the world. How are you assessing the growth prospects for Malaysia?
No, I think the important thing is to remember for Malaysia, over the last 2 years, we've been pressing the reset button and looking at how do we rebuild and re-strengthen the economy so that we can increase economic complexity and be able to position Malaysia into a better space in the future. And I think we had a great year last year. GDP growth has come in a lot better than we all forecasted. We've beat the original budget target. Even Bangara revised their outward projection for GDP, and it looks like we'll probably cross 5% overall for the whole of last year. This year, I think that tailwind will still continue. I think we have a good base because foreign direct investments remain strong, and a lot of the activity that's generated is now playing out through the economy. And because of that, I think we are confident that we'll have a good year too this year. In the budget that we put out between 4.5 to 5.5 GDP growth, and I think despite the choppiness in the global market, where we are today, I think we've got enough resilience to ride it through.
I like the optimism. Can you put a number to it? You talk about 4.5 to 5.5%. Closer to 5.5?
Well, this year will be higher than 5. But as most finance ministries are fairly conservative, I think we'll remain about 5.
What do you make of the challenges from trade? I mean, this is a country that's reliant on trade. I think it is 60, 70% of GDP. And given that Trump policies could impact global trade, how might that play out for Malaysia?
I think the more important thing to remember, Malaysia is an open trading nation. And effectively what we want is an open market for everybody to participate in. We don't like to choose sides. And I think we've been able to navigate lots of economic positions over all these years and prove the point that we are a fairly open economy. Despite the maybe a much tougher stance along the way, the diversity of the Malaysian economy itself provides resilience along the way. So if you look at what we've built as a base, we started off with an agri-commodity sort of economy, move on into manufacturing, now we've got services underpinning it. The anchor businesses are also getting a bit more complex. Whether you look at E&E sector, semiconductor sector, the data centers that we've got in, they're all adding to economic complexity in Malaysia. This is important because we need to transition out of the middle income base that we're actually in. And the key is to provide better opportunities for our people so that they can grow and be able to enjoy the fruits of the labor that's come up. So I think the whole world is waiting with bated breath and seeing what's going to happen with what President Trump will be coming in. But I do hope that the principles of what we've had in the past, which is actually good free trade, will continue to exist because it's helped the world actually to grow into a much better form. And I am hopeful that we will get and be able to get people to understand that Malaysia is positioned as an open trading nation, and we will continue to be supportive of this going forward.
For Malaysia, it's been about fiscal resilience, fiscal consolidation. You're trying to build your coffers. From what you've said earlier, you've met your budget deficit for 2024, assuming that you will meet 2025 target as well. I'm just wondering, it is a fine balance. I mean, how do you spend and still manage to be physically prudent?
I think it's about being very creative in terms of how do you engineer the growth that's coming in. So I think historically we've always been strongly dependent on foreign direct investments to help, to spur, to bring technology capability, money into the country to build it up. But what we've probably now tweaked a lot more is actually dependence also on direct domestic investments. Because actually the financial space that exists in Malaysia is high. Our funds are fairly cashed up. And if I look at all the GLC, GLICs that actually act in that side, they have assets under management of nearly 2 trillion ringgit worth. And they continue to grow because we're still in the demographic dividend sort of basis. So people are still contributing more into the funds and so on. So deployment is easier. So what we need to do is to make sure it's orchestrated, whereby some of this money actually gets redeployed back into a Malaysian context. And I'm happy to see that the GLICs are also embracing that. They see investing in Malaysia is worth the effort. There are lots of opportunities that can be garnered in. They may need to do it in a different form, but they're positive of it. So we've seen, for example, what traditionally the GLICs will invest plus or minus nearly RM500 billion over a 5-year period. They're boosting it up by another 120 billion over a 5-year period. So that's a fairly significant step up. Yeah, and they're doing things in a different form in order to anchor it. So again, creating different engines that are feeding this is actually very, very useful to underpin the growth forward. The second thing is attracting the right type of businesses and building an ecosystem that actually is supportive of that is very, very important. So when you look at the E&E space, for example, we started the E&E space probably in the 1970s. And over the years, we've been expanding. So new people have come in, but we've also creating a secondary ecosystem around it where local suppliers get integrated into the main supply system. So it's making it much easier for that business to continue to evolve because the supply chains are a bit more secure. So we understand that geopolitics shifts are actually occurring today, and people are looking at friendshoring, nearshoring, and all these things. And I think when Malaysia has a robust ecosystem, we then bring in a lot more investment inside it, and we continue to keep the engine fresh along that side. The second thing, or the third thing that the government is actually doing is activating it. As you've seen earlier this week, we announced the GSEZ and we formalized that with Singapore. And it recognizes that both do better if we all collaborate and we don't compete with each other. And both can play on different strengths in order to shore up that. And I think it took a while to get us to that stage, but I think the alignment now is good. So that again becomes an engine of growth for both Malaysia and Singapore.
Let's talk about the special economic zone. There are huge targets out there. I think it's $26 billion added to Malaysia's GDP, 100,000 jobs to be created. These are huge numbers. Realistically, how soon do you think we'll see the benefits of this economic zone? I mean, when will it kick off in the first place?
I think it's important to recognize this one was not an overnight thing, right? It's been something that both countries have been focused about building alignment, because the most important is to align, to agree that this is possible, and therefore understanding what are the complexities of making it work and what facilitation we can do. And the facilitation could be things in terms of agreeing priority investments that need to be done, facilitation in terms of easing the movement of goods that cross the borders, facilitation in terms of easing the movement of people across borders. And I think that investment that we all did in trying to get that alignment done eases the next stage. Yeah, but if not, it's an idea, then you suddenly run into bureaucratic blockages along the way. The second thing then is actually making sure that incentives which are given, they actually focus about the right things that we want to do. And we saw with the rollout of the GSEZ that tailor-made incentives are matching the desired growth areas in that segment. So in the GSEZ, they've broken down different zones that are prioritizing things such as logistics, manufacturing, digital, leisure and tourism, and all these things. So when incentives are given, they're not given blanket. They're given targeted in order to push that, because then you kind of coalesce the ecosystem in the right form along the way. So I think we've now put ingredients that will facilitate the quick realization of things along the way. And prior years of investments have also come to play, right? Malaysia's infrastructure, whether you talk about roads or rails, are getting better. The connectivity in terms of RTS is growing along the way, and it's building the ease of motion along the way. So again, what's happened is that it's moved from paper ideas to fundamental infrastructure things that are really going to make things activated. So I'm confident that as this thing goes out, and the announcements are done, discussions are on the ground now to actually realize the first round investments come in.
But Minister, it is about return on investment. How soon do you think you'll see that return?
Well, I think if you ask people, how did Malaysia look at the data centers, for example, right? 5 years ago, it's very scarce and thin. But today, Malaysia is enjoying the capacity, actually realizing the growth in the data centers because we have the availability of power, water, labor, space, and so on. So I think that conditions actually is being built up and when we talk about the GSZ. Again, move away from what we put on paper, but understand is the infrastructure, the zoning, the things are putting, facilitating that. And I think that base condition is the big change for Malaysia. And I think from a Singapore point of view, I think there are tremendous benefits whereby both parties can gain in terms of pushing segments of businesses in the right zone and helping complement each other to position both countries better.
And of course, jobs is a focus, 100,000 jobs, highly skilled jobs. How do you think those jobs can be filled? Is Malaysia prepared to fill those jobs?
I think Malaysia is learning along the way in terms of how to accelerate building good talent along the way. The E&E sector has proven that we can do it. And so when we started in the 1970s, it was a new skill set, right? But over the years, we've added in TVET trainings, we've added in tertiary training and so on. We created pipelines of people that can serve the industry. Now we're trying to migrate that in terms of the same methodology into a JICZ sort of methodology, and we're putting incentives to allow facilitation. So if you see our knowledge worker incentive that we put in, a lower tax rate in order to attract knowledge workers to come to Malaysia in order to facilitate accelerated growth along the way. At the same time, commitment put in order to train locals to be able to support the businesses that are coming up. So again, I think we need to be measured, we need to be clear, and you need to put real long-term policies that support that. So the incentives help, but the thought pattern, the anchoring in, the infrastructure builds have actually already pre-happened already in the past.
You talked about data centers and they're key, not just to Malaysia, but Johor in particular. And we've heard a minister talked about how the energy consumed by these data centers will be priced at a premium. Might that be a setback for these data centers and companies running these data centers? How do you look at that?
I don't think people just come to Malaysia because it's cheap along the way. If it was cheap, Malaysia wouldn't want to attract you to do it. People come to Malaysia because the stability of that infrastructure actually exists, the ability to do it, the ability to get it done and sort it out fast along the way. And as you bring in pure-based data centers, probably you don't get the right premium. But data centers attached to doing AI work and analytics along the way, then you start to get a bit more things along the way. Higher margin business can support higher margin cost along the way. I think that's the positioning that we're doing. And if you look at it, data centers by itself maybe not a huge employment of people, but data centers plus shared services attached to it, shortening the latency that exists between the data centers and processing centers, suddenly you're talking about a different proposition. So building that bridges is actually very, very important.
Minister, when you take a look at the world, it's pretty preoccupied still with inflation. When you take a look at the Fed, it is expected to have a higher for longer kind of position. Markets are dialing back expectations of Fed rate cuts for 2025. How are you looking at inflation in Malaysia?
I think Malaysia inflation has been quite controlled over the years. I think at the moment we're still sitting at about an inflation rate of 1.9%, along the way. Some of it is, of course, we've got a number of supportive mechanisms that help. And despite the fact that we're doing quite a lot of restructuring of the fiscal challenges that we've had, we're reducing dependence on subsidies, we're clawing it back and creating better fiscal space and so on. But we're targeting how we do the intervention so we get fiscal space, but the people who really need it get also supported along the way. So that way we can contain some part of the change. And if you look, for example, when we did diesel subsidy rationalization last year, right? The first fear that most people have, you're going to drive up diesel prices. Of course, knock-on effect on this is going to hurt cost of goods, and cost of goods is going to pass back to the consumer. So inflation is going to skyrocket in Malaysia. But it didn't happen. It didn't happen because the design of the mechanism was better thought out. So whereby we said that, look, basic goods that are important for the people and that need logistic movement and so on, we will provide still subsidized fuel to the logistics sector that are providing support there. Everything else you can price, then we allow that price to float. Sectors that we take away, we put market price, rate at the same time, people who are maybe the lower part of society, we give cash transfers to cushion the blow. And by doing that, both things, when we're addressing it, we immediately get fiscal savings and we're able to draw it back, but we cushion the blow to everybody else. So then inflation is managed in a better form. So I think that helps. But it did take a lot of hard work. It did take a lot of effort by the government to design it, to roll it out, and a lot of enforcement that's actually gone in to make sure that people don't take the opportunity to profit here.
The focus really is on the cut in subsidies for RON 95. What's the mechanism that will be adopted for that?
I think it was important that when we did the diesel rollout, it was important that we were able to show people that we can take difficult decisions, so long as if you design it well and you bake it in and use structures, support, technology to make it work. So in the RON 95 sort of mechanism, we want to get to the same outcome, whereby certain groups of people that will still need to be supported will continue to be supported. So that means some sort of two-tier pricing will actually be put in. But the two-tier pricing will help me in two things. One is support the people who need to be supported, but when the rest is at market price, then the inefficient or the not proper use of the subsidy will disappear. We did the same thing with diesel, right? When we pushed up the diesel price to market rate, effectively cross-border smuggling disappeared, or it reduced quite tremendously. Wrong sectoral usage taking from retail, which was subsidized, to commercial disappeared because there was no longer an arbitrage. So in RON 95, there will also be elements of that immediately, if we get the model right, we can already get a fiscal saving by that redress, because you take out arbitrages that are not supposed to be there. But support mechanisms are also fundamental. So if we provide support in terms of providing cash transfers, providing two-tier pricing, providing interventions along that line, then we can manage the effect of it. So inflationary elements will be contained.
You talked about support. Support is coming in terms of a hike in minimum wage, also a hike in public sector salaries. How do you see that playing through Malaysia's economy?
I think it was important because when we looked at the economy Madani framework, the economy Madani framework was not just about fiscal itself. It was about how do we address the long-term equity and balance for the economy. Generate economic growth, so make sure that headline numbers are great, yeah, but make sure that number is also trickling down throughout the economy. Yeah, so making sure that we are able to lift the floor so that everybody gets to enjoy the fruits of labor or success of Malaysia was fundamental. So part of the intervention was when we agreed to increase civil service pay. It's been 12 years since the last review of civil service pay, and they will be getting a 15% increase broken up into two parts, December last year and January 2026. So that will be a good stimulus to facilitate a bit more stronger consumption that comes in, apart from closing the gap of cost of living pressures that exist. At the same time, we are also pushing concepts such as progressive wage, where we're signaling to the market, we're signaling to everybody that as people get much more skilled, you need to pay them more, you need to pay them better equity. So lifting wealth in the country on a broader base creates a stronger engine for domestic consumption. And the third thing is we also work together with our GLICs and GLCs and government-linked companies to encourage them to say, okay, the government has done minimum basis, but you are fairly well structured while financially based. Surely you should not be aspiring at just minimum. You must be embracing more. So then I'm quite pleased that these GLICs and GLCs have accepted that starting base for them should be a living wage. And again, we get another step up of creating wealth at the level that's necessary. And again, that creates an engine that fuels the economy because spending actually occurs whenever money gets transferred along that line. But top-line growth must occur. That's why when we looked at the economy, it was important that we drive GDP. It was important that we bring in FDI. It was important that we drive domestic direct investments into the country. So ability to generate better potential so that redistribution occurs in a better form.
So despite these measures, there's little risk of inflation climbing. Is that a fair assumption?
I think the inflation numbers have been priced in. So when we rolled out the budget last year, and Bank Negara also indicated what the economic positions, what they were indicating between 2.5% to 3.5% as a potential number for inflation. And it will be transitionary because it's a one-time injection, one-time fix, then it sustains after that, right? So I think the government is quite comfortable that we can support this at this level. The key is headline inflation, be it 2.5%, whatever it is, but we must make sure that the right groups of people are supported when it's done it. And we've seen interventions that the government does through our Sumbangan Tunai Rahmah program or SARA program, but the lowest end of society that really need help, there are cash transfers that are giving them to allow them to address this. So if there are pressures, it's supported.
You talked about how the government is comfortable supporting the spending. Is there a need to issue any bonds at all to support the spending in the next 12 months?
I think the most important thing that we focused on in recent terms was bringing in fiscal balance, right? And fiscal discipline was important. We rolled out a new Fiscal Responsibility Act in December 2023. We put 2 targets whereby we said we need to keep it within this range. And we've been doing quite a lot of adjustments to how the fiscal spends of the government is done. Better discipline, better tendering, better controls have helped. Second, we did what was difficult that a lot of people didn't dare to do. We addressed subsidies. We said this is not sustainable, we can do it. So we were able to create fiscal space along that line. And you've seen the numbers come down. We were at 6.1% deficit, dropped to 5. This year, last year, the target was 4.3. The likelihood will even do better than 4.3. And
3.8?
This year will be 3.8 from the budget point of view.
And so you're saying that you might do better than last year's target?
I'm saying we will probably do better than what we said last year was 4.3. Because we've got better progress throughout the year. The successes of efforts that we've done in terms of rationalization have helped us reduce the burden to the government. So I think when you see all these things, it's creating the right fiscal regime that's underpinning it. And as long as we're going down that track, I think Malaysia will be supportive. We, of course, periodically go into the market and we actually support it with financial papers that pull out. But the demand will be driven really whether we ultimately need it, because locally generated funds is very highly liquid. Our GLICs are very, very strong. And debt that is provided by domestic is powering our ability to fund the deficit.
Quite a turnaround for the economy, and that is, of course, being reflected in the currency. The Malaysian ringgit started off pretty lackluster in 2024, but ended the year really strong, in fact, the strongest Asian currency. Is the level of the currency reflecting correctly the status of the economy?
I think when I first came in December 2023, then my first 3 months was quite challenging, right? Everybody is looking and focused about ringgit. So, but the position that the government took, the position that Bank Negara took, was quite clear. These are things that we need to manage, and the ringgit will find a fair balance. But we can support some element by prudent policies and structuring. So we got some help from our GLICs in terms of supporting government initiatives and so on. So when they had excess profits, they brought it back. Yeah, so that created demand for the ringgit and so on along the way. But it was not the primary driver of why we did. It helped just cushion blows along the way. The second thing was making sure that as long as we can generate a lot of FDIs coming in, we can generate a lot of interest coming in, investments coming in, then the demand of ringgit actually helped. And of course, when the Fed started to cut interest rates, it helped also add momentum to that change. So alhamdulillah, we've seen the ringgit then appreciate a bit, nearly 3% by the whole of last year. And probably one of the only two Asian currencies that were positive during the same period. Going forward this year, I think we all will live in a higher for longer sort of environment, but the base drivers are still strong. Malaysia's FDIs are still strong, the DDIs are still strong, GDP is still holding, and these create a lot of anchor economic value that will help that balance better.
So you see the ringgit hovering at current levels through 2025. Is that a fair assumption, even against the backdrop of a mighty dollar?
I think we had a mighty dollar at the beginning of last year, right?
That mighty dollar has slammed a lot of Asian currencies, emerging market currencies.
But as long as the ringgit continues to get support coming in, again, economy continues to be strong, imports are measured, exports are growing still, and supportive mechanisms between Managara and the JICs allows us better tools to use to cushion blows. But ultimately, one can manage the foreign currency position. One should not try to manage it too dramatically sharp. One should understand that the base drivers are more important. Create the economic drivers for it. Bring in the FDI, support the DDIs and so on, support the GDP growth along the way, then the currency will look after itself.
It does seem like the economy is in a sweet spot. Does that then mean Bank Negara can stand pat for the rest of the year?
That's a dangerous position for us to say. I think Bank Negara does a good job of actually understanding what they need to do and when they need to intervene. And their whole role is to make sure that there's stability inside the drivers actually manage along the way. And they will continue to do that depending on what the market indicators are.
Minister, you've expressed optimism throughout our conversation. Just to wrap up, what do you see as the biggest risk, the biggest challenge for the Malaysian economy?
I think the reality is it is a very challenging geopolitical environment. Now, the key for Malaysia has always been about creating resilience, creating trust, creating core segments of the economy that will always underpin it inside it. And that's why building ecosystems are very, very important. A&E sector has been very strong, semiconductor strong, building the oil and gas sector is strong, and moving just away from just exploration and production to downstreaming adds value to the whole thing. So when you look at the economy Madani framework, it's about creating resilience, strength, and base. So while the market may have choppiness attached to it, but one should not just get dragged to address the choppiness, but understand that if you can translate your plan into a longer-term, sustainable thing along the way, then you will be able to ride whatever form. And that's important. At the same time, government policy, government positioning, like what we're doing with GSCZ, GSFZ, creates more momentum. What we're doing together with our GLICs in terms of inducing a lot more domestic investment, create a lot more safety nets and balance and ability to spend, and then cushion things along the way. So again, I see risk. We all see risk. We all have to face risk. It's how you manage it during that process. And everybody has to roll up the sleeve. Everybody has to do the right things. But we should not be panicked if we see a little bit of choppiness, so long as that game plan going forward is always continuing to be pushed on, and we underpin the drivers of the business, and we sustain the thinking about building resilience.